Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. In the gold market you could see that yesterday was really surprising upward action. It was not quite reasonable and logical from the market mechanics point of view, but that sometimes happens when the market is driven mostly by the market technical moments, not the technical analysis but the pure technical issues, such sort of option expiring day when the traders start to close the option positions, just short covering before important events such as the Fed meeting, and that was the case yesterday. So that was simultaneously the expiration date for the May options on the gold market, and that is the eve of Fed meeting, and that's why, as traders said, recent rally mostly was a short covering. Partially we have talked about it in our weekly research when we have taken a look at the recent safety C data, when we didn't find there any new long positions from the institutional investors. They mostly stand flat. The long speculative position is unchanged since approximately within the month or even more, while the short position gradually decreasing on the gold market, and the new splash of the short covering has happened yesterday. Also guys, SPDR fund reports on the flat action. Right now it has the storage is approximately 739 tons. That's just the 2 tons greater than the couple of weeks ago, so you can see no real inflow is going into the ETF. So it means that investors are not hurried with the taking new long positions. That's why this recent rally is not very reliable, and so you could call it as the fragile action. And we should not hurry to take the long position, anticipating on the possible upward continuation. Besides, guys, I do not like to trade the surprising markets. I like to understand what is going on, and when I see that market is moving as it should do, that gives me the confidence with the taking the positions, because it gives you some assurance with the expectation what will happen when you see that market is showing the logical action as market mechanics suggest. While here we see surprising action, and that brings uncertainty in the price action, and that this situation where I do not like to take the position. I prefer to wait when the market will return back to the normal action, and after that think about the taking position. Because take a look what we have said in the weekly research. We said the retracement could happen. In general, we anticipated this retracement, but it should start from the 1173 area. So right on agreement, the 618 support and the target of this ABCD action. But what we see, market hasn't quite completed this ABCD action, turns to some surprising upward action. This was really fast. In such circumstances, our setup, our trading plan has not been materialized, since market hasn't reached the area where retracement should start it. Taking the short position with such circumstances, personally I do not want to do this, because this explosive rally absolutely doesn't encourage me to take in the short position, while taking the long is also a real question, because yes, we have this upward action, but it was not supported by any real inflow and real new long positions. That was just the technical moment on the exchange, the Chicago Mercantile Exchange, due to the option expiration date on the market. Market participants massively have started to take the profits on the short options, maybe on the put options, maybe on the closing of the calls, sold calls. So that's really makes a lot of doubts and questions on whether we should take the short, whether we should take the long position here. So my opinion in the current situation is that it will be better to wait the results of the Fed meeting. When we will get the clarification, there's pretty much room to as to the upside as to the downside, depending on what Fed will say. And if Fed will confirm the soon increasing of the rates and gold return back to the downward direction, we will reestablish and take finally our short position, because the target to the 1140, 1130 lows is really far from the current level, and we will be able to take short position. While if Fed will postpone and will hint on the more hawkish policy, on a more dovish policy, in this case upward direction also could continue very significant distance, and we also will be able to take the position after that. But that will be absolutely quite another story, because we will take the position in the situation of much better clarity than currently. That's our view on the gold market. On the 4-hour time frame chart, in the technical point of view, it's nothing drastic has happened yet, because you can see, yes, retracement was fast. Market has hit the 1205 area. And what we say in our weekly research, we said if you will see this explosive upward action, do not take the short position. Level, yes, we have spoken on 1205, but we prefer to see the gradual retracement, but not such sort of the retracement. And yes, markets has been broken through this 1205 resistance, the crossing of the trend lines. In fact, market again has retested this broken trend line and simultaneously has hit the spike of this triangle. It's also retested this line as well, and from that standpoint, the situation has not changed yet, since market hasn't passed through them yet. But this really could happen. And currently, I think that we should stay aside from any gambling here, and just wait for new information, new inputs and wait for the clarity that could come after the Fed meeting. That's our position, and I think that's a correct approach right now to the gold market. Because whatever position you will take right now, it will bring you very significant risk. As from the technical point of view, where you place your stop. So you will take the long position, where you will place your stop here. That's why we think, as I said, it's better to wait results of the Fed meeting, and after that we think that we will have a lot of chance and pretty much of time and room for taking the position. But this position will be absolutely normal and will have the foundation from the market action and from the new fundamental data. This will be just safer and more reasonable.